Good evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening as we're sitting here now on Monday, the 12th of September, 2022, just getting on to 6 p.m. Central Time. We've had a heck of a rally over the past 4 or 5 days. The market has just, if you did, unwound itself from the Jackson Hole event with Fed Chair Powell. It is looking now into the CPI and PPI numbers. Tomorrow at, I think it's 7:30 in the morning, we get the CPI number. The estimate for it's around 8 to 8.1% for the headline, which is down anywhere from 0.4 to 0.5 from the 8.5% that it saw in July, whereas the core CPI flip-flopped up 2 to 0.3, back up to 6.1 or 6.2% from a 5.9% in July. So what does the Fed study? It studies the, if you will, the core PPI, because it doesn't like to take into account the volatility of gasoline, energy prices, food, and so on. What'll help, of course, the headline numbers, used car prices continue to fall, and a number of other goods. But in the core, which is the sticky PPI, I don't see that dropping much. So the market has decided, for whatever reason, that it's going to be a beautifully rosy report. And it's rallied on it, which creates a problem for the market because it's already discounting that. Now, what it hasn't discounted is the possibility maybe the report comes in 7.5% on a headline. Maybe instead of going up on the core, it sits where it did at 5.9%. That would give traders the idea, they're onto the right thing, that inflation is falling on its own, and the Fed doesn't have to get as aggressive as it was, and the U.S. may not tip into a full-fledged retest of the current lows in the stock market, recession, blah, blah. On the other hand, if you don't get the drops that you're looking for in that headline number, watch out the other way. I want any part of that. I told my traders, go to the sideline. In the gold market for the week, okay, we're up 0.5%, so the market's bouncing a little from where it was on a weekly chart. You can see how it's come up ever so slightly. It's getting a little bit of a break tonight, giving back a good chunk of what it's already ahead for the week, what it made today. But the trend is still higher lows, higher highs. That is bullish. The resistance right here at the 18-day average. Now, if you got my morning futures line that I write, not the one that I record my morning futures video. At 11:30 in the morning or so, I published that. I said today, as silver had gotten up, I said, you watch, that 1797 level, at least right now, should be a resistance zone. And the market seems to have stalled there. There's no genius to it. I'm watching the key moving averages, and what I teach is this. When a market's down, the first rally spot is normally, if you can get up to that 18-day average, that's the number. And from there, the market figures out what to do. So at this moment I'm recording, while the trend is up on the swing line of higher lows, higher highs, the bias is down. Since you're not over the 18-day average of closes, you have nothing. You had a bear market rally. When I look at what the market did in the Bollinger Bands, you only stay under the band 5% of the time, and eventually markets can move away from it. And what else happened? Well, what happened here is pretty darn evident. Let me see if I can get this to happen. And because you see this in so many of the markets. Let me show you the impact of Fed Chair Powell's Jackson Hole speech, which took place around this area. But the market had already been making lower highs, lower lows. Do you disagree? If you take out this high right through there, and that high was specifically 1737.40, you open the door up to possibly get back to wherever the 18-day average is, and then the market starts afresh. You took it out, you worked your way, and this is what you did, and this is tonight. Got the point that I'm making? What about momentum? Well, this called it. The momentum, the bearish momentum was lost back here. For those of you that have taken my enhanced Bollinger Band course, you see it lost right there. And that was calling the rally back to the 18-day average, which tells me to stop here for a minute. I'm going to hold a live webinar this coming Thursday. So on the 15th, it will be held at 12:30 p.m. Central Time. If you're on my mailing list, you got an invite. If you don't see it, look for it. Go to your junk mail as well. If that doesn't work, what you can do at the end of this, you're going to see a video, and you just move your cursor to the top of this, and an icon will appear. Click on it. You can fill out the form, and that's it. I start promptly at 12:30, and I end promptly at 12:50. It's 20 minutes. In your invite, there's an email where you can write me what market you want me to cover. Don't write me during the webinar. The odds are I'll already have enough questions if you do as you should. I don't want to be bothered with going back and forth and putting in symbols and creating whole charts. Give me the benefit of creating the charts before we do the webinar, and away we go like that. All right? All right. Gold-silver ratio. Man, did this tumble. Almost 10 points. That is phenomenal. You don't see this very often. Not at all. I mean, here's a phenomenal run-up. But a break of that size, we haven't seen one of these in a long time. There's something big going on there. What silver has basically done is it's gone from the lower Bollinger Band to the upper band, and it's now defined the trading range. In it, it's gotten overbought as well. Do I think the pros came out today against that band? Count on it. That's why this morning when I wrote the report, we were at we just got over $20, and I said, I'll bet you that 1797 area, that is your near-term top in the market. And I said it then, and now you're back down to 1980. That's 20 cents. It's not a little bit of money. On a full-size silver contract, that's $1,000. So give me a little due where the due is done there. Would I want my traders going into tomorrow's CPI? Zero chance. Sidelines, we attack the market after the fact. In the copper market, you seem to just be holding here at the 18-day average. The trend is down. Got that? The bias is up. You've corrected an oversold condition, and you're sort of sitting. Now, if China's locking down as much as they say, why is this going up? Number two, if the CPI is falling and interest rates are going to fall and U.S. industry's coming back, I get it. If CPI doesn't fall, or it stays too sticky, might be the better word, and the government's got to continue raising interest rates, this rally doesn't make sense. I'll wait for tomorrow to make my decision. In the platinum, what do you do as you're attacking the 100-day average in the upper Bollinger Band off a vertical price rise that's overbought? You want to go through the report? Fine. Now, here's the beauty of futures versus the stock market. Futures trade in most markets, not all of them, 23 hours a day, starting Sunday night at 5 p.m., finishing up Friday at 4 p.m. This is all Central Time. The vast majority. That does not mean that your markets like coffee, cocoa, sugar, the platinum do that. They do not. But the gold, the silver, the copper, they do. Everything on the CME group has got the hours that I'm telling you electronic, not the grain markets, not the meat markets, the old-fashioned markets, avoid it, but the ones that are with it, how's that for a good word? They trade those hours. Look at what you've done in the palladium market. You've gone